Hi, I'm Gord Kerr, President and CEO of Enerplus Resources Fund. I'd like to take a few moments to talk about our plans to convert to a corporation and what it means to you as a stakeholder of Enerplus. 4 years ago, the Canadian federal government announced that they would impose a new tax on income funds. This new tax was similar to the tax imposed on corporations, and it was to be effective on January 1st, 2011. These actions resulted immediately in a significant decline in Canadian capital markets and the trading prices for income funds, including our fund. Well, January 1st, 2011 is fast approaching. Subject to approval from our board of directors and our unit holders, Enerplus is planning on converting from an income fund to a dividend-paying corporation on January 1st, 2011. This decision is not only in response to the taxes and restrictions imposed on Enerplus by the Canadian government. We also anticipate a number of broader benefits, such as a simplification of our structure by taking advantage of government rules that are designed to encourage corporate conversion, removal of Enerplus from the uncertainty that exists in the income trust marketplace today, and expansion of our investor base and improving our access to capital by attracting investors who prefer to invest in conventional corporate shares. This conversion should result in very few changes to the organization that you know today. We are planning this conversion to be as straightforward as possible for investors. We will be retaining the Enerplus brand. Rather than Enerplus Resources Fund, we will be known as Enerplus Corporation. We'll continue our efforts to keep our employees, contractors, and neighbors safe, as well as conducting our operations in a responsible, ethical way. Our ticker symbol will remain the same, although we will be dropping the UN at the end of our Canadian ticker. Our investors will be asked to exchange one trust unit for one share in Enerplus Corporation, a simple one-for-one exchange. This exchange should be tax deferred for both our Canadian and our U.S. investors. Our existing board of directors will continue as directors of Enerplus Corporation. This conversion will not result in change of control or termination payments being made to officers, directors, or employees of Enerplus. There will be no accelerated vesting or payout of any incentive rewards as a result of this conversion. Let's talk about our distribution policy for a moment. We expect to continue distributing a portion of our cash flow to investors every month in the form of monthly corporate dividends. The amount of dividend we pay is determined by how much cash flow our business generates. Cash flow will vary depending on commodity prices, production volumes, capital requirements, and costs, as it does today. Although we can never guarantee the level of dividends, we expect to maintain our current level of 18 cents per share per month through the conversion if current commodity prices and circumstances prevail. Enerplus has been operating as an income fund for nearly 25 years, and we understand the strong demand for income-generating investments. Our portfolio of mature cash-generating oil and gas assets helps us to meet this demand. We believe that distributing a portion of our cash flow to investors imposes discipline in capital investment, meets investor demand for yield, and delivers superior returns to investors in the long run. Enerplus has about $3 billion in tax pools available to shelter it from Canadian taxes. In fact, we don't expect to incur cash taxes in Canada for 3 to 5 years after we convert. I'm forecasting this in the context of current commodity prices and operating plans, of course. Even after 2015, we would expect to be taxable at a rate of 10 to 15% of cash flow, much like any other oil and gas company. Our oil and gas assets have a natural decline as we produce them. In an effort to become more self-sustaining and introduce a growth component to our portfolio, we have been working hard to acquire and develop earlier stage growth assets. We have been successful adding new assets in some of the best plays in North America, like Bakken oil in North Dakota and Saskatchewan, as well as Marcellus shale gas in Pennsylvania and West Virginia. This will introduce an exciting growth component to our returns. We have also been active in selling non-core properties in an effort to build a greater concentration in our portfolio and focus our people and their efforts on fewer plays that offer greater scale and better economic returns for our investors. At the end of the day, we are targeting a consistent 10 to 15% total return to investors through a combination of the dividend yield and growth in reserves and production. We will be mailing an information circular to our investors in mid-November with all the details. It will include information on how to cast a vote. On December 9th, we will be holding a special meeting of Unitholders asking our investors to support our conversion plans. If you have any questions or concerns, please feel free to contact our Investor Relations Department through our toll-free line or through email. Thanks for listening.